Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my good friend Larry McDonald. He is the founder of the Bear Traps Report and he has the best-seller book called When Markets Speak. Oh, there's the book. I can't believe you actually had it on you. I wanted to get you on to talk about everything that's happening in the financial markets, give us a little bit of an overview, gold and silver. But first, let's start off with, Larry, can you give us an overview of the current state of the financial markets and how it may be impacting investors right now?
There's two big things going on. One is the awareness around return on invested capital, ROIC, on Mag 7 investments, capital expenditures, and artificial intelligence. And what's happening is, and this happens in all great bull markets, just think of the shale boom 2010 to 2014. If you didn't invest, Ivan, if you were a CFO in the energy space in 2010 to 2014, and you weren't overdosing on investments, you were fired.
No
It's
way.
like a scene from like a scene from The Sopranos. Like it's like a bunch of guys. It's fear of missing out,
Right.
FOMO. This is the same thing on roids. So these companies have overinvested without really a path toward return on invested capital. And now investors are starting to wake up to that. And that's causing a massive dislocation in the semis because the probability of the trajectory of the current path of investment is now rolling over. And so a lot of the estimates around how robust that, that artificial intelligence investment path would be are coming down. The second thing that's happening is the correlation between oil rates, so interest rates, and copper moving together the last like 3-4 weeks is really disturbing in terms of like that's pointing toward recession risk. And then if you look at MasterCard and Visa, the way they're acting relative to the S&P, also pointing toward increased recession risk. And then if you
Right.
look at McDonald's and Darden restaurants, they employ close to 400,000 people together. They're two huge restaurant. Those stocks relative to the S&P. At the end of the day, Stan Druckenmiller, my favorite of all time, he always said, my favorite economist is sitting inside the stock market.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. Is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Oh, yeah.
And that economist is telling you right now that the probability of a recession is surging at a very fast pace.
Absolutely. And what major trends are you looking at, or do you foresee shaping this financial market in the next year? And how can investors really prepare for them, Larry?
Well, think about the last 2, maybe 3 weeks. We've had a seismic shift in financial assets versus hard assets or value. So about $1.5 trillion has left the Nasdaq 100 in
Right.
the last 15 days. And the rate of change of that, if you look at the Russell, say the Russell value versus the Russell growth, that rate of change of that move uh, is extremely violent. I mean, you go back 20, 30 years, it's one of the most violent shifts that we've seen. So it tells me that right now, the probability of value stocks outperforming growth over the next year and a half is extremely high. That's probably the most important shift that we've seen in the last 2 weeks.
Absolutely. And, for the gold and silver markets, a lot of people are talking about, it doesn't really matter what the price of gold or silver is because fundamentals long term are going to outweigh if it's silver $30 or $35. Are you a current buyer at right now at the gold and silver prices, or are you going to hold off for a pullback, or what are you thinking?
we lightened maybe a month ago into that strength, and we're looking to buy. Yeah, I would start to nibble in here. I love silver here over gold, especially like the gold silver ratio. It shouldn't be anywhere near an 80 handle. It should be in the 50s.
Right.
And so we're going to get but what happens is as the recession risk rises, a lot of money still hangs out in gold, right? Because people are worried about the industrial impact on silver. But once the Fed starts cutting and admits they have to be on a more aggressive path toward cuts, that's when you get this massive shift out of gold into silver, and that's probably within the next 2-3 months.
Absolutely. Now, Larry, how do interest rates, how do the interest rate changes by central banks impact various asset classes within, the financial markets, and what should investors watch for right now, Larry?
Okay, so that's the most important question right now. Is so over the last 6 months, the global developed market central banks have been moving more dovish or more toward accommodation
Right.
than the Fed has, more aggressively toward accommodation. And so now the Fed is now starting to shift. Once the Fed starts to catch up with them, that's where the dollar is really going to start to weaken. That's going to really help hard assets. So the first stage is, so think of the top developed markets in the world, those central banks. When those developed markets, like the Bank of Canada, for example, they're much more aggressive, right, than the Fed has been toward cutting.
Right.
And all around the world, that's happening. So that's leaving the dollar pretty strong. But once the Fed starts to shift and catch up with them, dollar weakens, and then you're off to the races with hard assets. That's coming right at us in the next 3, 4, 5 months.
Oh, so you think it's in the next 3, 4, 5 months that the Fed is going to cut rates?
Oh yeah, they could cut. I think there's a good chance they could start cutting tomorrow.
Wow.
If not, we probably get 50. If they don't cut tomorrow, we get 50 bips at the next meeting of cuts.
Wow. That's and of course that'll affect precious metals. A lot of people saying the second the Fed does make that move and cut rates, precious metals is going to have huge movement. Do you think it'll be lower or higher initially?
Yeah, well, that's the problem. It's like when the Fed's not as dovish as the other central banks, the dollar's hanging out at a strong level.
Right.
That's preventing the move to hard assets. But all this is going to shift, because if you just look at the performance of, say, like I said, copper, oil, rates, and then you look at, like I said, McDonald's, you look at all the big consumer cyclicals, you're getting this big shift toward recession. That's where the Fed gets nervous. They cut. And yeah, so by year end, silver is higher today than where it is today.
Absolutely. Can you discuss, Larry, the the impact of geopolitical events in the financial markets, and offer kind of insights on for investors how they can navigate such uncertainties in times like this?
Well, today was a very strange day. There was a pretty
Right.
aggressive retaliation by Israel against Hezbollah, and oil should have been up 1 or 2%. Oil, last time I checked 20 minutes ago, is down 1% even after this move. So that tells you how much economic potential stress there is coming in. Gold was up. Gold seemed to react to the Middle East. So at the end of the day, we have an acceleration of risk in the Middle East, where these retaliatory strikes. Now Iran probably comes back and does something. So this is going to probably play out for the next 2-3 weeks. And that's going to be very good for gold, most likely. But it's for investors watching us right now, when that type of action doesn't get a move higher in oil, that tells you, number one, oil's coming up into really bad seasonality. September and October are the worst months of the year for oil. Plus,
Really?
you have the election. Yes, so they're really bad. Whereas the other way around for natural gas, the seasonality in natural gas in the fourth quarter is very strong. So I'd be looking at natural gas plays like here right now. I'd be looking at Antero, AR, your big natural gas names that are potentially could benefit from a nice bounce in the fourth quarter.
Wow, that's super interesting. And what are you watching for right now that you're cautious for, like in the markets, other than just what we've talked about in this interview so far? What else are you cautious or keeping an eye out for in the markets?
Well, the Kamala bounce is important, and the Democrats are the smartest, shrewdest operators, and whether or not you're Republican or Democrat, you have to respect them.
Right.
And this is the time of year where, they're going to probably put a centrist in the ticket. They're probably going to have a nice convention. And you want to look at some of the solar names here because, oil's lower. That helps solar names. But you could get a really nice bounce, what we call a Kamala bounce, because you're going to get most likely a further bounce in Kamala Harris and the Democrats against Trump as they come out of the convention. And then Trump's got to get, they got to make a counterattack, towards September. But
Right.
in the meantime, I'm seeing institutional investors really start to look at some of these beaten down, like look at the TAN ETF, way off the highs, washed out, left for dead, really. And so you want to start looking at things like the TAN ETF as you get a bounce for the next 2-3 months as the Democrats get a bounce.
Absolutely. Larry, it's such a huge pleasure of have you coming down to Wall Street Silver. And I know you're not in your office today. You're in a beautiful scenery, so you beautiful view. So thank you so much for joining us and coming down to Wall Street Silver. And as always, love to have you back.
Thank you, my friend. Yeah, we're in Calgary. It's great. Mackenzie Investments invited me here. I gave a keynote speech this morning, and it's great to end the day with you. And I'm sorry about little construction noise behind the back, but it was always enjoyable. Thank you, my friend.
Awesome. Talk to you soon, Larry.
Okay. Bye-bye.